5 years ago, this dollar and this goldback could buy roughly the same small basket of goods. Today, the dollar lost 22% of what it could buy, and the goldback almost doubled its buying power. Stick around because the numbers are about to hit hard. What's up, stackers? Welcome back to the Gold Stacker, the channel where we cut through the noise and show you exactly what protects your wealth. Today, we're doing a deep, no BS comparison. How has the purchasing power of the US dollar stacked up against the goldback over the last 5 years? We're using official CPI numbers, real gold prices, and actual goldback trading data from 2020 through November 2025. Let's go. What exactly is purchasing power? Before we jump into charts, let's make sure we're crystal clear on the single most important concept in personal finance: purchasing power. Purchasing power is simply this: how much real-world stuff, goods and services, can one unit of money actually buy right now? Think of it like a measuring tape for your money. When prices go up, inflation, that tape shrinks. When prices go down, deflation, it gets longer. Example.
Well, look, we're talking about affordability. That's just your dollar's been getting crushed. You know, the house that you live in didn't inherently get more valuable. The money that you measure it in got worth less. And gold is another indicator. One of the best performers in the past year or 2 years has been gold. And that's just one of the worst performers has been the dollar.
In 2020, a gallon of milk cost about $3.20 on average. Today in 2025, it's closer to $4.30. So even though your paycheck might be bigger in raw dollars, each dollar buys less milk, less gas, less rent, less of everything. That's purchasing power erosion in action. The opposite is true with hard assets like gold. When the gold price rises faster than consumer prices, every ounce or fraction of an ounce buys you more real stuff than it did before. That's exactly what we're about to prove with the goldback. For the new viewers, a goldback is a voluntary local currency note that contains a precise fixed amount of 24-karat gold embedded in a durable polymer bill. The smallest one, the half, always has exactly 1/2000th of a troy ounce of gold. That gold content never changes, so its base value moves 1-to-1 with the gold price. Added to this, the manufacturing cost is incorporated into the value of the goldback. It is how the price of a goldback is determined.
You know, this is the most successful local currency in American history by the numbers.
What if you accidentally invented the next currency because of the shit that's going on?
You know, that would be quite the failing of everybody else, I think.
I think the government would shut you down or kill you. You can't replace the monetary system for the central bank and expect to live.
You know, I'm really hoping that the central banks, with all the gold they're sitting on, looks at this and they think this technology would be great for us.
Well, why wouldn't we do it?
Here are the hard numbers. Official CPI shows consumer prices are up approximately 28% since 2020. That means the dollar's purchasing power has fallen to just 78 cents on the 2020 dollar. Meanwhile, the goldback, because gold went from approximately $1,770 to over $4,100 in the same period, now commands almost 186% of its 2020 purchasing power. That's not marketing, that's math. Gold didn't just keep pace with inflation, it crushed it. That's why a goldback that traded for $3.50 to $3.60 in 2020 now trades north of $8.40, even with the same fixed manufacturing cost baked in. Allow me to paint a contrasted picture for you. If you put 10 grand under the mattress in 2020, you need about $12,800 today just to break even in real terms. Your actual purchasing power? Only $7,820 in 2020. You basically lost $2,800. Poof, gone. Now take that same $10,000 and you put it into goldbacks. Those same notes today are worth the equivalent of $23,500 in 2020 purchasing power. You're up $13,500. Same starting amount, same 5 years, $15,680 difference. That's the power of owning something with intrinsic value instead of fiat paper. Why goldbacks are a practical inflation-proof tool. So yes, as a small denomination, inflation-proof store of value, and actually spendable hedge, the numbers speak louder than anything else. You can walk around with real gold in denominations smaller than a dime's worth of gold, and over 1,000 businesses in Utah, Nevada, New Hampshire, Wyoming, South Dakota, Florida, Arizona, and growing pockets of Texas already take them for everyday purchases. From coffee to car repairs, you're spending something that's quietly gaining purchasing power instead of losing it. And with options like UPMA's Vault program offering 0% buy-sell spreads on up to $10,000 a month, stacking and liquidating has never been smoother. This isn't just a collectible, it's functional money designed for the world we actually live in. So to wrap up, 5 years of real data, dollar purchasing power down 22%, Goldback purchasing power up 86%, a 108 percentage point gap in favor of physical gold money. If you're tired of watching your savings silently evaporate, maybe it's time to ask yourself one question. What do you want your money to do over the next 5 years? Shrink or grow in real terms? But here's the thing most people still miss. Goldbacks are incredible for everyday spending and small denomination stacking. But if you want to see what's happening on steroids, look at silver. Same 5 years, same CPI inflation numbers. Only this time the gap is even more brutal.
So you took over the Fed in 2006. I have a silver ounce here. And this ounce of silver back in 2006 would buy over 4 gallons of gasoline. Today it'll buy almost 11 gallons of gasoline. That's preservation of value, and that's what the market has always said should be money. Money comes into effect in a natural way, not in an edict, not by fiat, by governments declaring it is money.
5 years ago, 1 ounce of silver and $20 bought roughly the same basket of goods. Today, that same ounce buys 2.5 times more real stuff, while the dollar lost 21%. Let's run the exact same test we just did with Goldbacks, but with physical silver. Silver's real purchasing power didn't just beat inflation, it went up 143%, while the dollar fell 21%. That's a 164 percentage point gap, even bigger than the Goldback's already insane 108-point spread. Same $10,000 in 2020, cash route ends in a drop to 7,900 real dollars left. Silver route leads to an increase, amounting to $27,300 of 2020 purchasing power, a $19,400 difference on the exact same time frame. So here's the 5-year scorecard nobody is putting on the same screen until now. The dollar, down 21%, Goldbacks, up 86%, physical silver, up 143%. That's not luck. That's not speculation. That's the market pricing in what's already been set in motion. Precious metals aren't risk assets right now. Cash is.
Do you think gold is money?
No.
It's not money. Even if it had been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money. I yield back. My time is up.
Inflation seems pretty optional at this point, doesn't it? It's because it is. The dollar was depegged from gold so inflation and debt could run rampant with no checks or accountability. No, here we are, 38 trillion in debt and a dollar that's lost over 90% of its value. I'll be making a video in the future about Nixon lying to our faces and killing the Bretton Woods Agreement, effectively poisoning the dollar to the point the U.S. had to threaten the world to continue accepting it as the reserve currency. I'm going to enjoy that one for sure, but by all means, please let me know if there's a topic you'd like me to tackle. If this video finally made the light bulb go on, do 3 things. Smash that like button, subscribe, and hit the bell. Tell me in the comments which one you're stacking harder right now, Goldbacks for spendability or raw silver for pure upside? Stay sovereign, stay stacked, and I'll see you in the next one.